Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to today's Bull versus Bear webinar on Tuesday, the 15th of August. Steve Miley on the call here for Trade Day. Welcome, everyone. Welcome. I'm going to go through our usual regular run through in here today, calendar, what we've had, what we've got coming up. Take a look at articles from the major news wires. What are those? Central bank, macroeconomic, fundamental, data-driven, geopolitical factors that are influencing financial markets right here, right now. And then we will take a look at some articles. I'm sorry, some the charts. We have a quick look at the charts as well. I'm going to start off though with a quick plug. Yesterday, well, if you're in the US, yesterday afternoon. If you're in Europe, UK, yesterday evening, and in the middle of the night, if you're in Asia, I was on Real Vision TV. So on Real Vision in here, online financial markets, live streaming, Newswire. Thank you, Rob. You were very impressive on Real Vision yesterday, Steve. Thank you very much. So I'm going to throw that into the chat. That's on their YouTube channel. We will post it onto our own YouTube channel at some point over the next 24 hours. So that's one thing, talking all things markets, not day trade views, obviously. Did do a little recap of what we saw yesterday, more looking at short to intermediate and then even like intermediate to longer term views. And just pointing out that the real risk to markets is from the bonds, for the stock markets, that is watching the bond markets. And, we discussed that. Did do a little dip into dollar, gold, oil, but really it was looking at stock indices and then looking at potential. For me, I think I'm still, looking at this from a bearish perspective in the short to intermediate term, but then looking bigger picture, we're looking for buy opportunities. So, I kind of outlined that view, but I think the trigger point is going to be a move to higher yields, and we're seeing higher yield moves this morning. Bonds going to lower prices, higher yield. We're going to take a look at that, and we also talked about China, and very aptly, as China then made a move overnight after I spoke about China and potential stimulus from China. I'm sure they weren't listening to me on Real Vision. But I spoke about that last night, and then obviously China eased interest rates overnight in here. So making myself laugh now. It's never a good sign. So take a look at the video if you're at all interested. Thank you for you did watch it last night. Now, some of you may have picked up on that by the fact that, and you know what, I'm going to show my ignorance. I don't even know how to take you to our Discord server, which is going to be quite annoying. But if I go to, actually, you know what, if I go to our Twitter page in here, and I can share. So we launched our Discord server yesterday. If you haven't joined our Discord server, you can get to it from Twitter in here. So here it is, Trade Day Now on Discord. There's the link there. So if I click on that, it's probably going to take me off to the Discord. So in here, what I'm going to do in here is I'm just going to share that with you. So if you click on that link there, if you haven't joined up yet, we've had calls for this for some time now. So we are now on Discord, and I'm going to look at. I'm not sure. I don't think we can live. Shows my ignorance about Discord. I'm not sure whether we can live stream through Discord. You guys tell me, but I'll work out. Maybe we'll also stream the webinars through Discord as well, if we can do that. I don't know whether that's a thing or not. So we might look to do that as well. But anyway, for now, join up. There's some little bits and bobs in there. It's more just to build the community. So please do join up if you haven't. You can verify. There's instructions in there to verify that you are a Trade Day member, that you're a subscriber, and if you are, then you get access to various rooms and channels and whatever. I don't 100% know. So go take a look at that, guys, if you're interested. And it's going to be hopefully a good forum for all Trade Day traders, where you can share your experiences of the market, share your experience of Trade Day. We had a good little launch. Had quite a few people sign up and subscribe. So please do go across there. So those are my two plugs this morning. Take a look at the Real Vision interview if you want. It's only 30 minutes. You can skip through if you want. And then Trade Day Now on Discord. Right, let's get to the markets. What we've had, what we've got coming up. Well, overnight, really, we had two things. One, we had the this Chinese data, and you can see most of it in here between industrial production, retail sales, unemployment data is most of it's red rather than, and we've got a few in, well, the ones in line are actually where we haven't got data prediction, so they're not really in line. And they also abandoned, there was a youth unemployment figure, and because it's hit a record number, they've stopped now publishing that because it's such a bad level. But these numbers are all negative, and China then cut one of their interest rates last night, which was unexpected. I think, a survey of economists, only one out of like 15 or 20 I read, predicted this rate cut from China. It certainly was very much not expected. So we got a surprise rate cut out of China. But the worrying thing is, despite the rate cut in here, this negative data in here has weighed on markets more. So we go and take a look at Asia overnight in here. You see the Hang Seng was down 1%. Okay, so that's a real concern here. And I've got some various articles. You see how much worse can China's economic slowdown get. We'll run through those articles shortly. But the slowdown, even though they've cut rates in reaction to obviously the slowing economy, there's been a lot of talk about them trying to stimulate the economy more recently. A lot of talk from not just from outside, but from within China, from the authorities, that this was coming, that we're going to get extra support for property markets, for various sectors, for tech, for and just generally for with interest rates. And even when they deliver something in here, the market's actually down here, and you can see European markets, down in here this morning on the disappointment from those numbers, despite them. So God knows what would happen. Maybe it's even that it could actually be that, excuse me, you've actually got an even more of a negative. The fact that they've kind of unexpectedly cut rates is maybe even seen as a sign of a bit of panic. So that's even maybe spooked markets. Maybe if they hadn't cut rates, markets wouldn't be down as much this morning because the data was negative. Maybe they would. We don't know, right? But it could be that this kind of the negative data and then an unexpected rate cut, even though the rate cut in itself should be positive, has actually seen them maybe, well, this is a bit panic stations, and it's a knee-jerk reaction, and then that is actually taken. So say the Hang Seng down here about 1% this morning, but you look at European exchanges in here between 1.2, 1.4, 1.6 across the French, German, and UK markets this morning, and also US indices, futures in here dragged lower by that as well. So between 0.6 and 0.75% here across the major averages, mostly are down around 0.2%. So certainly that's weighing on markets this morning. So let's just go through. Other than that, this morning as well, we've had some significant UK data, kind of mixed in here. Earnings though data, well, actually not really. You would argue kind of negative really. So earnings data, so the labour market data in here. So the claimant count and the employment change worse than expected. So that can be seen as a positive. It shows that the actual labour market is actually loosening up a little bit. So we've got kind of negatives on unemployment, but can be seen as a positive. But this is the real worry in here. And the headline I read that the earnings growth in here, 8.2%, the average earnings plus bonuses, ex bonuses, 7.8. Both of these beating. And the headline that I saw this morning from the UK was that this is the highest number since records began. Now, records began, I think, only at the beginning of the century on this average earnings index, but nevertheless, 8.2% is that's powerfully strong earnings growth, and obviously that can feed through into inflation. This just opens the door to the UK central bank, the Bank of England, to continue to increase interest rates. The German ZEW, so it's not been a good morning at all in here. German ZEW economic sentiment survey. Parts of it red, parts of it in green in here. So nothing particularly good in there. Looking ahead into today now, I'm going to just skip the US data for now, but we do have from the cousins north of the border, we do have the Canadian data in here. So we do have Canadian traders. Welcome to all our Canadian traders. Hello. So we do have Canadian data out this morning, CPI, important data, inflation data for Canada. But then at the same time, we get the retail sales data out of the US. So that's going to be significant. We're watching that. And that comes on the back of, if I go to the earnings. Now, remember, we weren't going to be looking at earnings in here, but I do want to just focus on a couple of earnings that we have, or three sets of earnings this week. We get Home Depot today, which we've had, and you can see beat expectations in here. And if we go to a few of the headlines in here, so US retail therapy as China funk deepens. So talking about the negatives on China, but US retail therapy pointing to that positivity in here. Talking about the retail sales data in here, but then also pointing to that positive data from and positive earnings from Home Depot. And as you can see in here, look, Home Depot earnings top estimates as DIY spending sustained. So all of that positive in here, showing the resilience of the US consumer, but nevertheless can't hold up stocks in here. So that positivity coming out from the consumer, not holding up stocks. So retail sales will be interesting to see if we can get a rebound after the overnight weakness. Let me just run through slide things to start your day. This geopolitical, not really that significant to probably us on the day trading side in here. Trump indicted in Georgia. Yellen optimist calling China's economic weakness a risk factor to the US. So we've been talking about this for ages. Remember, guys, we've been talking about this. This would come up and plague markets for some time. God, and people say, "Oh, when's it going to happen, Steve?" I can't remember who was asking, right? But probably some of you guys. Maybe it was Richard. I don't know. But I mean, I know a few of the guys who have been in here. Jack. Is Jack still coming on? I haven't seen Jack's name in here for a while. But quite a few of the guys who are regulars on the call, we've been talking about this, you'll know, for weeks and not weeks, months, right? And saying, this slowdown in China will come to bite, the US at some point. And, Biden's been talking about it, Yellen talking about it now. It's a little weird. It was a red flag back then, and now there's a real red flag waving. And obviously, we're seeing a little bit coming through now. So markets, China, Asia down overnight, and it's weighing on US markets now, where before the market it was kind of ignoring it. What else do I have? But Warren Buffett's Berkshire Hathaway put with new holdings in D.R. Horton, NVR, and Lennar, blah, 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 blah. Nothing really impacting us. And markets down this morning, and talking about US retail sales. So Home Depot recovered. The morning bid in here, this is the Reuters equivalent of 5 things. We looked at that. Stocks, bonds fall. China rate cut deepens. So actually the rate cut, as I said in here, look, that headline implying that economic woes mounting China's post-pandemic recovery continues to falter in here. And this is what I was talking about in the interview last night about yields. Yields breaking higher, their highest point since October, breaking through some important levels in here, higher yields, lower prices. And we're going to take a look at that as we move forward a little bit further. Fed's interest rate debate is shifting. Officials won't limit options until inflation decidedly eases. This is going to be the concern for the market, right? Jackson Hole Symposium opportunity to discuss transition. Jackson Hole, early September, I think. Let me just wind down. Are they talking about Jackson Hole in here? Lens the date of Jackson Hole. Probably got another. It's definitely not in August. I know that much in here. Does look got it in the headline, and then can't even see nothing in the actual. Let's see when Jackson Hole is this year. It's usually early September, I think. Jackson Hole Economic Symposium. Where is it? 2023. Where's the date? Anyone see a date? Oh, no, August 24th through 26th. Okay. Usually I thought it was into September. Okay, August 24th, 26th. Got that wrong. Okay, so, a couple of weeks' time. It's interesting. So we'll certainly be keeping an eye on that to see if we get anything out from the Fed from there. Right, what else do I have for you guys? So a lot on China in here. China cuts rates by most since 2020. Economic woes deepen. PBOC lowers one-year policy interest rate 15 pips, 15 basis points, 0.15%. But, on the back of this very negative data in here. Barclays cutting China's 2023 GDP growth forecast to 4.5%. China rate cut reaction, the latest sign Beijing has more to do. So again, highlighting potential panic in there from the rate cut. China cuts key rates as beach back of July data. Lots on it. China central bank unexpectedly cuts rates. So lots on it from the major news wires in here. Here's the yield chart. Look at 10 years. I took out the high from last week this morning. Okay, well, late yesterday and going into this morning. Took out last week highs, but more importantly, if I scroll across in here, you can see moving up in here to this peak in here from November of last year. Okay, so that peak there in rates is 424. So through there, we're right up to there, and then above there opens the door up to the. Then this is a long-term peak. Okay, this was from last year. Okay, from October last year. And that peak there at 434. So real concerns we could leap up to that kind of level and maybe even higher. Okay, that will be the real concern. That's on the 10-year note. And if we go and take a look at the charts, what you see is the 10-year note just taking out the lows this morning. Look, we got right down to the lows from actually a week and a half. Yeah, no, last week, from last week's lows. Was it last week? No, a week and a half ago. The lows from a week and a half ago were just taking out those lows in here this morning. Okay, so breaking down through some important levels, and that's going to put lower prices, higher yields, going to put pressure particularly on the Nasdaq in here. So just watching out for that. Let's just run through the charts here, and then you've got the 30-year as well. Look right down, watching that one to potentially break next. The 30-year there, the lows at 119.25. We're holding above the low from a week and a half ago. 5 years just taking out the low from a week and a half ago, and now aiming for this spike low down here. So that's the real risk for the 5 years. And then 2-year, obviously the shorter end not as damaged here, but look, even the shorter end just nudging at the low from a week and a half ago. That's at 101.10 on the 2-year future. And then that low there is 101.05. If we take that low out again, if the short end starts accelerating to lower prices, higher yields, that is a real concern, because it's showing that the Fed are more likely, it's an echoing that Fed more likely to stay on hold. Okay, so that's a real concern for markets and real concerns about potential recession down the line. So keeping an eye on all those levels. I know you guys are not necessarily trading on the stock on the bond markets, but they are the markets that are driving the stock indices. You can see we had a decent rebound yesterday and given most of that up again in here already today. We did take out those little resistance levels I flagged yesterday, these little ones, but couldn't get up to the major level up here, right? That high. And, whilst above the overnight, yesterday's peak, it looks negative for S&P. I mean, minimally, you got this little level here, 44.92, but ultimately it's got to get all the way back up here, like 45.18, for it to start to ease the negativity. And if you can see this little kind of, this like basing trend line in here, through here, look, we're taking this out already and playing with that already. So real risk down back to yesterday's lows, and then below yesterday's lows in here, and the last 2 days lows, excuse me. The risk is then down to that just below there. You got that retracement as well. Remember that 23.6% retracement, 44, like 53, 52 level down through there. Then opens up maybe a deeper move today towards 44.20, maybe 44.10, down to that kind of area there. So we could see a deeper sell-off in here today. Probably not going to get too deep a sell-off. I wouldn't be surprised to test the lows and maybe just extend below the lows. Remember, we've got the Fed minutes on Wednesday, but it will depend on retail sales in here. That's the S&P. Let's take a look at the Nasdaq. Similar kind of story. So not quite as negative, surprisingly, but look at that 13-period exponential moving average again this morning. The market goes right up to it and fouls on the daily chart. Certainly should be plotting that one, guys. It's been really good resistance, through this more recent down move. Got right up there and fouled from below there. And now if we look, really it needs to get back above the overnight peaks, above 335, and minimally above like 235 and then 335. Those are my kind of lines in the sand on the upside to ease the bearishness. But really, if you look in here, we've taken out this little support in here, 15,171, and back down through the recent lows, from through the overnight lows below 158, opens up back to the lows down here, back down to like 15.03, 040, 03, 030 kind of area down here. I think there's real risk down to these lows and maybe extending below the lows. So and then again you've got this retracement and these lows in over here, so they are around 14,850. So there's real extension risk, potentially not today, but maybe getting towards down through those. It could get down to there even today. So I think it's all going to it will depend on the retail sales number. If the retail sales number, I think actually a weaker number is probably positive for the market. It's going to be a bit counterintuitive. If you have a really strong number, I don't know if that's going to be potentially good for the market or not in here. All right, guys, any questions on any of that? That's what I've got for today for you. No questions, nothing coming through. All right, guys, I'm going to wrap it up there. Check me out on YouTube on the Real Vision. Do join up onto the Discord server, and you can find there's a post in the forums to get to that. You can find the post in the forums or via social media. Sign up to or obviously click on the link that I've put in the chat here. And I'll be back with you. Going to wish you all a great trading day as ever. Take care, stay safe, and I'll be back with you with another bull versus bear webinar on Wednesday. Bye.